Welcome, and thank you for joining me on this presentation. MisterBlond is a comprehensive options trading platform that leverages today's latest technology to offer the best performance and capital protection features available in the market. It includes scripting for market making, scanning of volatility opportunities for market taking, a full enterprise risk management solution, and powerful volatility skewing tools. We also offer full access to the North American derivatives market. It has been built over time from a plug-in feature to a full-fledged trading system, taking into account almost a decade worth of customer feedback, market volatility, and changing regulations. I'm now going to give you an introduction on the different pieces that make up MisterBlond. Let's go ahead and start the application by double-clicking on the MB icon. Once the application loads, you can add an individual stock by clicking here, or you can add a predefined book by clicking here. Once everything is loaded, you will see the individual stocks listed here. Let's go to Apple, for instance. Now you can see the grid that's presented as a way for traders to easily define what they're looking at. It can be formatted in different layouts and is completely customizable to the trader's need by double-clicking the header here, where you can add different columns and sort them horizontally on the axis, or you can right-click and change the color of the background and the text. These are all completely customizable, like I said, from the corresponding colors to their location on the axis. They display market data such as Greek updates, implied volatility, and other valuable information that the traders use, such as the scripts being run on a specific line and the volatility that it's being used to calculate. There are even options to add yesterday's market closing values or various implied volatilities. For demonstration purposes, I've already added a few of them, but you can add whatever you like. You can add the hedge, you can add cash position, call put position, add those here, and they'll be added to the end of the list, which you can change the location on the horizontal axis by clicking up or down and then simply clicking OK. So now that you can see that once I put these in, they're added to my end of my list and they're all located here. You can change the colors, you can really do whatever you feel like you need to. It's fully customizable. If we scroll to the left, you can see the CQ bid, C theoretical value, CQ ask column, along with the PQ bid, P theoretical value, and the PQ ask. In MisterBlond, this displays the calculated quotes based on your rules. We have the theoretical values and the quote bid and quote ask that are straddling these values, so they're easy to read. In this layout, we have a column that has the series already predefined, so it's easy to navigate, but you can also navigate by clicking on each individual month of the underlying stock here, which will load all the series and the strikes. You can even check to have them vertically displayed, which will display all the months on one grid, which is very useful at times. Okay, and further, you notice above these three boxes you see tabs. Right now we're in the quote display tab. We have underlying, the size rules that you can implement, a risk management tab, a Greeks tab, your overall positions for that security, another rules tab, a spread rules tab, and now a rules definition tab. Okay, now if you look beneath the grid, let's say on the bottom left, next to where I showed you how to add an underlying security, we have a general message box which will show messages such as open or filled positions. We have a risk management box which you can single click or double click here and manage its location independently. And to the right you have the underlying securities bid and ask price. You can single click here to open another box to hedge a security if you need to. Go ahead and close that. You'll notice on the left side of the screen we have a list of basic rules where we have an at the money, out of the money, and wide rule. These can be based off of edge or market size as you choose. Once these are customized and defined, you can implement these rules by going to the Size Rules tab. Here there's a drop-down menu which we can click, and let's say we want to use the at the money rule here. We can go ahead and do that and copy it and paste it in all the cells, just like an Excel workbook. On the right side of the screen, we have delta or price-based rules, which we can indicate here as delta Z delta 1. You can refer to the rule-based tutorial for more information, but for a quick overview, between 0 and 5 cents of edge on the delta rule, we use the out of the money predefined script, which is here. Between 5 and 10 cents, we use the at the money script, which is here. And between over 10 cents, we use the wide script, which is indicated here. Once these are defined, we'll save what we have, and you can implement these by sending quotes off the toolbar by clicking here. We'll get into the toolbar later, but for now let's navigate to the main quoting page again. As I mentioned earlier, the CQ bid and CQ ask, along with the PQ bid and PQ ask, are very important features for market makers. These values are important in some specific electronic eye features that are used to determine if an order should be sent to buy an offer or sell a bid. Now, all quoting and electronic eye features can be turned on by using the control panel here. Here we can turn on all quotes, and from here we can send the quotes, as I mentioned earlier. Here we don't have an active data feed connection, so the quotes won't be sent. But for demonstration purposes, this is how everything is turned on and sent. More specifically, you can turn on all quotes for this current month or for all months in all displayed securities. And you can do so also by sending the electronic eyes for just the displayed security or for all the securities listed here. Now, before we get into too much detail about sending orders, we have various features available to protect the traders from market volatility spikes or fast market conditions or even connection latencies and limitations. If we navigate to the underlying tab here, you can see various risk management features for the trader that are used to either halt quoting or stop electronic eye orders from being sent, such as if a bid-ask spread is greater than, let's say, 15 cents, then Apple quotes would be automatically pulled and no more scanning of or electronic eye orders will be sent. You can also use this to predefine delta and gamma or vega rules and specific fast market conditions. Now note that if you need more features to protect the trader, you can navigate to the Preferences screen by clicking on the Preferences tab in the toolbar, which will pull up this box here. Now let's clean up some real estate and further detail the option pricing model that's used to drive the Greeks and theoretical values. For each underlier loaded in MisterBlond, you'll find a set of interest rates in the first tab of the Q page. Here you can define additional parameters that control the electronic eye and quoting features, such as pulling quotes or a pop-up box if a certain rule is breached. The customizable features are really endless here. You can access these by clicking the model button here, which will load given interest rates, specific dividends, or an underlying futures hedge. These can all be manipulated and exported into Excel for further customizing. Further information on the model, just refer to the option pricing video where we'll go into detail the interest rates, the dividends, and the rebates a little bit further. But for now, let's go back and highlight some of the risk management features. we can click on the Risk Management tab here, which will bring up a box with different inputs that we can customize. Here we can implement different position-based and Vega-based thresholds to further protect the trader. As I mentioned earlier, you can navigate towards the bottom and see a total calculation of our Greeks. If we double click here, we can further bring up this Greeks box, which has so per Apple and per underlying month, we have the total delta, gamma, vega, theta, and Greek positions, the total theoretical edge positions per month, and then we have call put position, shares, daily P&L, and total P&L. And daily P&L is calculated on all day trades and previous trades based off the calculation of the closing price of the previous day. For further risk management, we can close this out and pull up our risk monitor, which now you'll see a layout that shows the prediction matrix. We have all our underlying securities listed here. There are 3 different variables on the bottom that you can manipulate to predict your profit and loss. You can predict a change in the underlying security, a change in the volatility, and a change in time. And each one of these can be manipulated by itself or all together. Here we can see our predicted position in the VIX. Let's say if the volatility were to increase by 5% in a few days. And we can update that and refresh it here. You can see our change in the predicted profit and loss. Now if we toggle off the profit and loss, we can see a prediction in our total delta, gamma, vega, theta, and rho position. This is really a powerful tool for risk managers. I've just highlighted some of the features, but I will dive into detail in the risk management tutorial video where we'll go in depth on the different features. Now another valuable use for this risk monitor is with enterprise risk managers. If you navigate back to the quoting page, you can see that for this demonstration we only have one account and that's all, but if let's say there were different traders being managed under this account, we could see all the traders listed individually here. And you can select an individual trader and refresh this prediction matrix to correspond to them, or you can highlight multiple traders, which is good if there's a hierarchy within the group. You can select individual groups, or you can select all the groups and see their total position, total Greeks, and predicted positions if, let's say, volatility were to increase in the next 10 days. MisterBlond has an additional feature that allows traders to set their implied volatility skewing parameters. We call this the volatility skew or smile. You can bring this up by clicking here. As you can see, we have all the months selected, but you can toggle off individual months as needed. The average market implied volatility is represented with little dots. The trader has his own volatility represented with the crosses. MisterBlond uses 3rd and 4th polynomial curve fit and smooth fit curves. You can toggle them off here. The left part of the curve is the put curve. So MisterBlond maintains at all times 2 different curves. The trader may change easily each curve by manipulating the at the money volatility, the slope, and simply dragging the circles around. We can zoom in by clicking here, and we can zoom out by clicking here. MisterBlond automatically changes the curve based on the underlier's movement. Once the volatility curves are the way the trader wants them, all he has to do is press the apply button and update MisterBlond with the corresponding values. Then MisterBlond will put his quotes in scanning to make sure his theoretical values are correct or not, if that's the way he wants it to be configured. Also, the trader does not need to use the smile to change his skew that generates his theoretical values. He also has the option to simply set the implied volatility to set his own volatilities. You can do so by accessing the toolbar here and clicking Set to Implied. I'll further address the volatility skewing in its corresponding tutorial video, but for now let's continue the presentation with volatility scanning and the different arbitrage opportunities. So MisterBlond is the electronic eye feature, which is embedded for most part of the rule definition screen. The electronic eye feature is embedded for most part of the rule definition screen, but for this part, so for now, that's a basic overview of the volatility skew. I'll detail the different customizable features in its corresponding video, but for now, let's continue the presentation and briefly overview the volatility scanning and arbitrage capabilities. So for the most part, the electronic eye feature is embedded in the Rule Definitions tab here. You can see that we have a box specifically for the electronic eye, which we can check off. This is the part of the rule that deals with the electronic eye. We can set up the eye to watch for edge opportunities where the size is smaller than the certain number and no further out than our quote by so many ticks, let's say. We can further indicate this in the Preferences tab by clicking on the toolbar here. The electronic eye can either generate automatic orders or a pop-up window each time an opportunity that matches our parameter is found. Here we can also set other parameters such as how many exchanges the price is to be found, the number of orders generated before stopping the scan, and the order size that we want it to cap at. In addition to the electronic eye, we show a dynamic list of edge opportunities on the underliers located in the MisterBlond. We can also even correspond a hedge with the stock manually or automatic, to send orders manually or automatic, and we apply these settings by clicking here. Once these parameters are defined and applied, we can go ahead and start Eagle Eye by clicking here on the toolbar. Now we have initiated Eagle Eye. You see, an eagle can see a foot-long fish in a lake from a 5-mile radius. That's the type of eye that we're talking about here. You can set up different scanning rules in the Rules tab and apply them as needed on different months on different stocks that you're watching. Any foreseen opportunity will pop up in this menu here. For instance, let's say if we have a 5 cents edge to buy the spread on Apple at a certain price, once that is found, it will pop up in this menu here. Once Eagle Eye finds the potential opportunity, it's displayed in this menu. You can click here to initiate the ticket for that then. Another tool we recently added to this is the ability to scan for spreads, butterflies, and various under parity potential for options. As an example, I'll show you if we navigate to the Rules tab. We have our spread arb and under parity checkboxes here, which we can toggle on and off by simply checking them. Here I have it predefined as 0 and 5. Now this being set means that whenever this script is applied, we will be looking for butterflies, vertical spreads, and under parity if we check, with a maximum paid value of 0. Respectively, we would be selling butterflies and vertical spreads for 0 cents more than their maximum value. The second parameter indicates how many strikes around we will be looking for the opportunity as it ticks. So a deviation of 5 means either 5 ticks above the strike and below for potential opportunities. This functionality is embedded into a DLL format, and if present, MisterBlond will notify the user that there is no model for price calculation, neither for any implied volatility calculated if the DLL is detected upon loading. This is a pure arbitrage scanner that obviously doesn't need any of the time-consuming model calculations. For more information, please refer to electronic eye arbitrage and volatility scanning tutorials or the information manual for further explanation. But for demonstration purposes, let's continue on to the auto hedge feature. MisterBlond includes a powerful auto hedge tool that has a continuous gamma hedger alongside it. You can navigate to the auto hedge configuration screen by clicking on the toolbar here. Here we have the auto hedge definition screen. For each stock that's loaded in MisterBlond, we provide a logic per stock for hedging the options positions with the underlier. We can simply hedge when buying the delta or selling the delta, or decide to hedge a portion of the delta acquired, or even hedge automatically or manually each time. We can even do a combination of the two depending on the stock conditions at the moment. The price we decide on to hedge could be NBBO or a slightly different price. To define that, we simply click on the rules and apply to a different stock. We can do that by indicating here. Follow here or click on the rules and define new rules for that. And there's also a volume monitoring tool that shows every exchange's options volume statistics. The product is downloadable from our consulting webpage. Additionally, MisterBlond offers powerful volume monitoring tools. We also added a volume monitoring tool that shows exchange option volume statistics. This product can be downloaded from our consulting webpage. Additional volume monitoring DLLs are also on that page. For instance, there's a DLL which will show the top 20. That'll add to the toolbar and be the top 20 securities that have been seeing the most volume in that trading day. By clicking on the top 20 button, you'll see the top 20 securities for options volume, and MisterBlond will no longer calculate the real-time option prices in Greeks at that point. Now, to keep performance acceptable, these values are only recalculated when the refresh button is pressed. There's also a trade loader DLL that allows the trader to load multiple numbers of trades that he has to inform on a CSV file. He can do so by loading the marketreplay.dll file. This will load the trades from up to 500 different accounts into MisterBlond for risk analysis. It's available on the site under Consulting. Now, MisterBlond also offers many tools for automating participation in auctions and the spread auction mechanisms. If we navigate back to the Rules tab, we see the Size Rule button that can become auction here. Now we have auction rules. In this mode, we can define auction specific rules that apply to different option bids and asks, or embed these into a delta or price based rule, similarly to do what we did for the regular rules. Now if we further click on the auction rules, we can define spread rules. The rule will define the different logic for each range of edge to be found in the SIBO spread book or in response to the SIBO spread action mechanism, the COA, or PHLX auction mechanism, the COLA. To create a rule and define the three tiers like we did before, we go ahead and click here. Let's add a name, 1, 2, 3, and add this rule. Like previously indicated for the regular rules and the auction rules, we can go ahead and embed these spread rules into our delta or price driven models. MisterBlond also includes a spread calibrator that will show what auction will be taken with anything in the complex order book depending of what spread rule is being used at that time. That tool is really useful when trying to figure out how to define those spreads. MisterBlond also includes a spread book that shows all spreads available for each stock that we are watching, which are sorted by edge. And last but not least, MisterBlond allows the participation in EOP, the expected opening price, by generating OPG orders around the theoretical values to be decimated to the SIBO in pre-market conditions. Only those marketable orders will then trade against other participants. This feature can further be adjusted to follow non-market makers to make markets with orders on specific strikes of their choice. If you need to, refer to the SIBO Tools for Market Makers tutorial for more information on that. This concludes our general presentation of the many features and functionalities of MisterBlond. One of its great assets is its versatility and the way it efficiently allows for scanning the market for opportunities and its vast risk management capabilities. We're confident that the many features in MisterBlond can easily be tailored around a specific trading style and risk tolerance. Thank you for sitting with me, and God bless.